Bunty Chawla, who's AVP at IDBI Capital, joining us this morning. Bunty, thanks so much for taking the time. You heard that wrap of almost everything that was said during that conference call as well, and the numbers, of course. What are you focusing on most right now for Kotak Mahindra Bank? Because you've had a dip of the return on assets. There's a little bit of a concern on asset quality. Where are you focusing in the quarter gone by?
Good morning and thank you. As you rightly said, the ROA first time it has gone below 2% as compared to its historical numbers. So the two key parameters were the net interest margin and asset quality, which is the higher credit cost. Now, firstly, if we try to compare with its peers like HDFC, ICICI, Axis, everybody was expecting 10 to 12 bps of impact on the net interest margin because of the repo rate cut and the first 50 bps which happened in the month of February and April. But the main surprise was that it was around 32 bps decline on a Q1Q basis. If you compare with the HDFC Bank of 11 bps, ICICI 5 bps, or Axis, which was at the higher peak of 17 bps. So it has surprised more negatively in terms of 32 bps on a sequential basis. And if we go with the commentary, still 50 bps rate cut, which has happened in the month of June, is still to be seen in the impact in the Q2 full year. Though positively, as you rightly said, the some bit of a positive is that you have a 70 bips impact of the rate cut happening in the saving side from 3.25% to 2.5%. That will have a positive impact in terms of in Q2, along with the deposit cuts which they have taken in different segments. So that needs to be seen very much focus area for us in terms of margin. If there is a positive surprise in terms of margin in Q2, then that will be taken as positively. Secondly, as you rightly said, in terms of higher credit costs, the key issues with respect to unsecured was MFI, personal loan, as well as your credit card. And in secured, there was a negative surprise in terms of retail CV. Though in the guidance or in the conference call, they have said out of these four, credit card, personal loan and MFI, they see it's almost stabilizing. So there should be a possibility in terms of recovery in Q2. So that needs to be seen in terms of credit cost. Is still credit cost inch up in Q2 or it is stabilizing that? So these will be the two parameters in terms of margin and credit cost hitting the ROA. Is ROA again moving positively? That will be our key concern or key focus area for us.
Bunty, hi, good morning. Tamanna here. I'm wondering if with the current valuations, you are able to see Kotak Mahindra Bank numbers with a bit of rose-tinted glasses, in the sense that valuations are giving comfort?
So if you see historical valuations, they were very much higher before COVID and all those things. Now the valuations has come down drastically after the change in the management and all. One thing we are observing, there is a big correlation between the ROA and valuation, price to book valuation. So if you are able to maintain the ROA above 2% again in Q2 and Q3 or overall basis about 2% on a FY26 per se. So there are chances the valuation will move again to 2.1, 2.2 inch up higher. So that gives us some bit of a comfort in terms of valuation if there is a possibility of ROA moving upside in second half, which could be the possibility as everybody's talking second half should be better than first half because the economic activity should improve going forward.
If you had to look at a Kotak Mahindra Bank, IDFC also has reported over the weekend, and some of the private banks. What is the kind of pecking order that's emerging, Bunty?
So as I have said, in terms of the focus area was the net interest margin. So the lowest net interest margin impact was in the ICICI Bank. So first thought process or first is ICICI Bank. Second, we will go to the HDFC Bank. As we know now, the management is completely focusing on the growth, and they have guided that inline credit growth should be there in FY26. So our pecking order is first ICICI, then HDFC Bank.
Okay. All right. Thank you so much for that, Bunty Chawla, the AVP, IDBI Capital.